Hi, and welcome to Random Rogers Big Picture for the week of November 11th. Wild week in the market, wild week in the comments of the blog. How about that? We had a new fund come out, that Timber ETF, which on the surface looks interesting. I'll dig into it a little bit and try to see what's what. We had an index announcement. Someone, Index Universe, reported this, created a Balkans index. Kind of ties in with the Frontier Index from S&P. I think MSCI has a Frontier Index. These are all interesting things. A little bit of upheaval in the world. Pakistan had some craziness happen, and we'll see what that means for anything going forward, but it really was a wild week. The market seems to be struggling. I'm going to say that it is unambiguously rolling over, and I think, I'm early, wrong on the timing, all of this stuff you care to criticize me on for it. I think it's pretty clear that we are now at a point where it is absolutely rolling over. It keeps, makes a newer high, or a new high, and then comes back down. It's, that's what a rollover looks like. These moves aren't that big, regardless of what you might be feeling, or regardless of what they're talking about on TV, yet it can't make any new ground. So I am convinced that we are rolling over into something normal. Normal bear market. I think the yield curve being inverted for so long is a big driver behind this. And, it's a point of the market not being able to go too far too long without its biggest sector, that being financials. And that leads to kind of a planning thing. And what do you do to try and make plans for that? You can go, kind of a more of an absolute route. You can, just sell out, I suppose. I had a chat on Friday morning with the Nakoma guys, and had a chance to, they delved into their process a little bit, and I think TheStreet.com is going to run that, so if they do, I'll put a link to it on the blog. But in hearing about their process and what they do, that got me to thinking about what it is I need to try and do next. I've had a knock on wood, a very good run these last few months, surprisingly so. Such that I actually had to double check that my generic portfolio, I hadn't somehow made a mistake. I cross-checked it, and it seems to be consistent with what's going on. But then what that tells me is, in doing very well in this environment, and really, I'm looking the camera in the eye and saying, I don't discount the fact that luck plays a role here. And at some point, when you were lucky one year, you will be unlucky another year. I don't know if I'll be unlucky in 08 or 09 or some other time in the future, but that's always waiting for you, good and bad years. That goes with the territory. The fact that you can wrap your hands around this ahead of time, if you can wrap your hands around this ahead of time, you won't get too full of yourself on the good years, and you won't get too down on yourself during the bad years. When you have a good year, you can't rest on your laurels. When you have a bad year, that just happens sometimes. You need to make either a little change or a big change. You need to figure that out for yourself if you are going to manage your own portfolio. And hopefully that won't happen, in the future, at least not happen that much. How about that? But so in trying to figure out what it is to do next, having a good run, the portfolio does not look like the S&P 500. Looking forward now, does that make sense? Well, based on my opinion that the market is unambiguously rolling over, and that's just my opinion, it'll be right or it'll be wrong, I don't know. And I'm not trying to make a timing call. I'll just let the market take me out. It's below its 200-day. If that continues to erode, I'll continue to lighten up. I feel like I'm pretty defensive right now. But what do you do? Since it is rolling over, so the way I see it, I'm probably more inclined to take on a little more in the absolute return realm. I don't know that I would necessarily buy an open-ended mutual fund to put in client accounts, but I believe I've kind of studied, written about, have some things in mind that add that kind of, taking beta, to use some jargon, take beta off the table. I believe that that's something that's within my skill set that I'm willing to do. There are certain things I'm not willing to do, like, what the Nakoma guys do is they do stock picking to go short. That's not something that I'm comfortable betting other clients' money on. Just not within my skill set. At least I don't think it is. So not going to do that. The alternative to that, or one alternative, is to sell out. Just flat out raise cash. Depending on how aggressively you do that, and I probably would sell a little bit if this bear market thing I'm on, tangent I'm on, turns out to play out. I probably would sell a little bit, but not a lot. A lot of the companies I own, I think fundamentally are doing pretty well. The one company I've sold recently was Starbucks. And I talked about this in another video, I clearly got something wrong. Not sure exactly what it was, but I know that I was wrong. But I don't really feel that way right now, that the stocks that are going down are going down for reasons that I don't think are actually fundamental. I think they're more about big picture things, and they're just going down. Like the financials, 3 of the 5 financials I own are down, in some noticeable amount. A couple of them down a lot, and I mentioned this on the blog, but 2 of them are actually hanging in there pretty well. So I feel like I've made some good choices. That being the case, I don't really want to sell. I've got cash. I've got a fair bit of cash. I could add absolute. I could add double short. All of those things I think would help neutralize the portfolio. To flip it totally around, does it make sense to look more like the market? In kind of a sinister way, it does, in that I've got a spread to the benchmark that, if I maintain it, looks pretty good on the marketing literature. That is some sinister action, especially if I don't think that's the right thing to do for clients. So that is unambiguously off the table. It doesn't mean I won't be wrong about anything I decide to do, but at least the intention will be right, which is trying to do the best that I can. So you, in your portfolio, are right or wrong. You're ahead, you're behind. You need to make changes, you don't need to make changes. Chances are you probably do need to make some changes from the standpoint of there's not been a horrible year for stocks. The market is up. We're 11 months in after many years without having a down year, and the market is up a little bit. Assuming you're up a little bit, assuming you've been roughly close to the market since 2003, up varying degrees all of those years, you might need to make some sort of change consistent with whatever exit strategy you have. But now is the time to start thinking about that. Take a look at the chart action if you want it. There are just some signs of it tiring, of it wearing out, rolling over. Call it what you want. This is a time to start trying to do some planning. That's what I'm trying to do. All heckles notwithstanding. That's about it. Have a great weekend.